Hey, it's Mac with PriceActionTradingSystem.com, and it is Tuesday. It's April 28th. This will be our chart lesson for the day, and pretty interesting day. This is just a range day, really. Notice the overnight lows, overnight highs. The thing is, this is a big range, and we really just traded all the way down to the low side, and then spent the rest of the day really going sideways here. We broke out here. There's a trend line coming down. We really got back to that, got a break outside, and we moved to a new low. Notice that. And now prices bounced into the close. Still inside the range, but you can see not only did the range play out, the trend line rules played out as well. So I had at least a couple of people ask me about going long right up in here. And obviously, and both of them had this trend line on here. So I'm a little perplexed at that. Sometimes you get a trend line break and it might come all the way back up to here or somewhere in this area and then turn down. But if you get a setup, by all means go short and be really careful. Make sure, but notice this trend line coming up, you had a two-legged correction, and then we moved to a new high on two legs. Notice there's one leg up correction, then there's a second leg up. There's a couple of swings in that. So this played out perfect. You got a break with two legs. So that's probably, there's a good chance that might be the center of your pattern. You can see we didn't quite get up there, so that leads you to think, hey, we're probably going to sell off pretty strongly here. So, but I would have measured this first leg. You get a more accurate read by measuring that leg first, and then that one. And you can see you got a perfect measured move, and that would have alerted you exactly when to probably be looking for a short, especially when we came up high. And there's a nice setup here, so we'll talk about it in a little bit. I'm going to save the trades for last. I just wanted to kind of show you the chart. I've got a whole list of stuff I want to talk about, so I'll try to get through as many of these as I can and leave a few minutes to go over the trades. First thing I wanted to talk about was an inside bar. Every day somebody asks me about an inside bar, and every day I explain it, and then I'll get another one. So make sure you kind of pay attention to this. Here's an inside bar just means that the bar is inside the bar to the left of it. Notice this bar's high is here and its low is here, and that's inside the low and high of the bar to the left of it. This green bar is an inside bar. It means exactly what it describes. It means it's inside the previous bar to the left of it. So here's one. This is an inside bar, and this is another inside bar inside that one. So you got two in a row there. And that's what inside bars are. So real simple, nothing complicated about that. But I get a lot of questions on it, so I thought I would show it again. Okay, somebody else asked me, when do you normally want to wait on a higher low or a lower high? Generally, really on reversal areas for sure. Like here, notice I marked that one green. I'd probably take that trade being that far away and the fact that we've bounced here before. But generally, you'd be better off to wait on that higher low. Unfortunately, you don't get a good signal bar here, but this would be the higher low. And it just helps confirm that, yeah, you're not just, notice how prices are just dropping and dropping and dropping, and you're making lower highs and lower lows. You're really gambling a little bit here by going long. So if you wait till you get a higher low and you're still not back to the EMA when you're bouncing off in a reversal type area, that just helps you confirm. You just got to be careful that you got enough room. You're either above the EMA or you got enough room back to it, because see how you start to get resistance right there, and sometimes it'll hold and turn back down. It's still pushed on through this time, so that's one place that you probably wait on a higher low. And then coming down up here, notice you got a big bearish bar right there. You could have gone short, but you're better off. What you're trying to do is make sure the move up is over. And so notice if you'd have, a lot of the times you would have been okay here. This one you would have got a scalp out of it. But a lot of times if you don't wait to make sure you get a lower high on the reversal, it just keeps working up. Like if you'd have went short there, you'd have got burned. If you'd have went short here, you got burned. But notice you finally make a high and then a lower high or an equal high, same thing, double top, and then it sold off. So that's where you're trying to generally wait. And sometimes the other place is like here. Really, you're going sideways, but there's still a little bit of a downtrend right there. And notice you had an overshoot. So there's a good chance you might get an overshoot on this side and a break of the trend line. So let's just assume that was a nice bullish bar. Well, you don't have a break of this trend line and a new low in place yet. So you could go long on that second entry. Notice there's a new high here and you work it back. You get a first entry and then a second entry. And it would have worked here. But a lot of times it'll only go a few ticks and then it turns to make that retest. And so this might be a time that you wait on a higher low too. And a lot of times you'll get one up in here somewhere. Of course, you don't want to be going long right into that. So this is not a great example. Plus, this is really breaking out of. But this actually is still a good example because if you look at the little range here and you see that we just broke out of that by taking that first move up, you would have got burned right there. So if you waited on a higher low, which is right here, then you would have been okay. So that still turns out to be a great example right there of why you might wait on a higher low. Just to be sure that this move down is over. And by doing that, you're just basically what a high low is or a lower high. It's just a little more evidence that the market has finished its move. So in other words, it looks like it's finished here, but then you get burned. And then so you want a little more evidence that it's finished by coming back up and making a higher low. Like right here, we don't know for sure that this move down is finished. There's a trend working down there. So you can see right there. So it could come up right here and go a few ticks and turn back down and stop you out. But if it makes a higher low, then you got a little more evidence that we're probably going to get at least another leg up. And if you got enough room on your leg there before you get to the high, then you're probably okay. So I hope that's clear on the higher lows and lower highs. Okay, here's a chart I got today. I wanted to show his trade. He sent me, and he had a second entry right here that looks pretty good on his chart. There's a couple of problems with it. I actually added the white lines. He didn't have that. But notice you coming down and you get a first entry and then you drop back down to what looks like the trend line and you get a second entry long. But you should have drawn this trend line. And this is another good example of where you might wait on a higher low. You got a lot of congestion across here. Notice how you got a doji and some stems, and you really got a little trading range right there. And we get a little failed breakout that side, then it holds again on this side. But notice you don't have much room back there, and it goes right back to that line, and then you get stuck in there, and then eventually turns on down because really the market's turning over here. But he missed. This might be where you wait on the higher low, because if you'd have waited right here, you would have noticed, you really would have caught the trap, the failed move up, and there's probably a long trap right there, and you just go short. See how fast it moves down. But really what's happening here is the market's turning over. And notice how that all looks like one move down and then one move up. So that's another clue that you're probably going to get at least another leg down. It may not be a measured move, so that could actually be enough. So, but that's the other thing. You got a whole move down, first entry, and then you're probably going to at least get a measured move here. But if you saw the whole thing, I actually redrew this. Let me find my chart. So here's my chart and the way it should have looked. And notice if you drew it properly, you already had a break, two legs up to a new high, and then you know it's rolling over. Here's where he entered on that bar right there. I just brought it to the far right hand corner of mine. And you can see you wouldn't want to enter right there, right into that resistance in that little trading range. It's a tiny, tiny trading range, but look, you can see it. And the fact that you already had a break in two legs up to a new high tells you, plus notice there's resistance up here and you've tested it once, you tested it twice, and so we're at least probably coming back to here. And this little short-term trend line, you've got a break and 2 legs up. So there's a couple of different reasons to assume that prices are going lower. Well, you can't really see that on his chart because he didn't really draw the chart right. He should have started right here and went off those closes, and he'd had the exact same chart I had. So, and you can see that little overshoot up here is telling you something's not matching up. Either he's at an overshoot, which would lead to a break, or just something that tells you his chart's not right here with that. All these should be equal up through there like it was on my chart. But if you start your chart right here, which is basically, mine may not have been quite that steep. I think I started right along here like so. And you still get the break, but notice I use these lows, and then you get the break and your 2 legs up, and you get the same thing I had. And you still see this overshoot down here. I believe that was overshoot. Well, no, there's not even overshoot. I think this was the overshoot back here. I'm not 100% sure, but you can see, I mean, you can see how smooth it looks right there. That's what when I say prices need to fit neatly in your channel, that's what I mean. When it comes to this line, it touches it and it goes up. When it comes to this line, it touches it and it goes down. It comes to this line, it touches, it goes up. It actually comes back a second time, goes up, it touches that line, it comes back. Then you finally get your break, 2 legs up. But that's what a good trend looks like. If prices are coming down and they're not touching your line, like his chart right here, notice how prices didn't even touch right there. That tells you something's wrong. Up here, it shot way up higher. Now maybe his channel highs are only here, but that's telling you something's not right when his prices don't fit in here neatly. So if he draws his trend line like he's supposed to, starting at the low and going off the bodies of the first swing, then he gets his break, 2 legs to a new high, and then you notice this second entry is below your trend line, and you've already had your break. So and plus he doesn't have any of his resistance up here. There was that resistance coming across. He doesn't have that. He didn't even see that. So he doesn't realize that prices are heading back to the low of the range. So you're missing so much if you don't draw your lines. So you can see the importance of drawing your lines properly. Notice that we're working up, and we just had a double test up here, and so we're expecting prices to come back down here on the bigger picture. Plus this is moving up, it's broken, 2 legs up. But this is what you call fitting neatly right here. Notice how prices bounce off the lows, they go to the highs, they bounce off that, they come back to the lows, they actually test it twice, they go back to the other side, they come back to this side, and you finally get your break and 2 legs up. But notice up here, they test it, they turn down, they test it, they turn down, they test it, they turn down, and when it comes back down here, if this is still holding, it'll test it and turn down here, back up here. So if your trend line, if your prices are not bouncing off the lines, something's not right. Redo it, look at it again, something's wrong. So I hope that's clear. That's how you know if your trend lines are right. When you draw this trend line and copy it and carry it over, this line here is a perfect clone of this line. It's got the same angle, same length, everything. I draw it, copy it, move it over. In fact, I probably drew it off these highs first, copied it and drug it down to here where it fit the best. But it still turns out that it's off the low and right off the bodies of those closes. And you can see how every time prices touch that line, they turn until they don't, and you get the break. Every time they come up here, they turn back down. That's what you want to see. You don't want to see any gaps in there, or this one coming down to here, and then this one coming on this side, and then this one down. If you're trend keeps going and you're seeing closes out here and then closes underneath, and you probably don't have it right. It should fit neatly, and that's what I mean by neatly, is prices should turn every time they touch those lines for the most part. So I hope that helps. Hope that's clear. Okay, somebody asked me about a spiking channel, and this is maybe a little example one. Notice how prices spike up real strongly there. That's way too strong for a trend. A healthy trend runs at about a 45-degree angle, so that'll be really from corner to corner of your screen. And if you look here, this price is spiked up and then they fell over into this channel. And you can see that channel clearly there. Notice how we spiked up and went into a channel. That's what a spiking channel is. So somebody asked me that, and you can see there's a two-tiered channel right there. And you can get spikes down as well. And you can get them on a smaller. Here's one on a much smaller. Look how that price is. That's way too much bullishness on one move right there. So look how it shoots up and then it kind of goes into a little spike before it ends. There's a little channel right there. And you can see that it's spiking channel. And so I hope that kind of makes sense there. Let's see if I can find one more. Maybe I'll pause it. All right, here's one to the downside. Look how prices spike down real hard, and then they make a little correction and they start the trend down. So this is a spike in channel. You can see that channel. That's pretty much it. We got a little overshoot there. It wasn't long till we overshot it here. But that, notice how prices spike down. There's, if I remember right, there's a bigger channel here, and we just had a shorter term trend line here. But there's a spike in channel in here, two-tiered channel if I remember right. But anyway, there it is. You see it. It spikes down and goes into this tighter channel. I guess it was a tighter channel. And then we get outside and go sideways. So, but anyway, I hope that's clear on what a spiking channel is. Okay, another trader sent me this. This is pretty interesting, and I'm betting there's some way to do this in NinjaTrader. I don't know how to do it. I'm sure. One thing about NinjaTrader is they have a great video library for both version 7 and version 8. Anything you want to learn, they got a video that tells you how to do it. Just go over to the video library, use the search function, and you can find anything you want. People will always ask me questions, and I don't mind helping if it's something simple with the software, but I don't really support NinjaTrader or multi-charts or Sierra or any of that. I use NinjaTrader, so I can help you with some basic questions, how to set up our ATM and things like that. I got a video out there on that. But anything more than that, you're better off to go to NinjaTrader or directly to AMP for multi-charts, because I don't even use multi-charts, so I can't even tell you much about them at all. The feedback from those that use it is it works. It does what we need it to do. It has tick charts. You can use CQG, same data provider I do, and they make pretty good charts. And it'll basically do everything that NinjaTrader will do that we need to do. Now, NinjaTrader probably has some really fancy bells and whistles just like this one, and I'm just going to move on to the point. But if you can see here, he circled this, and what he's able to do, this is, I'm trying to remember what charts these are now because I want to be able to tell you. I think, oh, this is Sierra charts. But he can load a certain symbol and actually take trades on a different chart. So he is charting the ES, but when he takes a trade on his ES chart, he's actually trading the micro ES. And so I thought that was pretty cool. And I guarantee you there's some way to do this on NinjaTrader. I'd be shocked if there's not. But you can see the symbol he's looking at is the ES. Looks like he's looking at the ES June 20th. And MES June 20th for the micro is where he's actually taking the trades. If you look, his symbols there for his chart and his trade in current quote symbol is this. So he's looking at the ES, but he's trading, when he takes a trade on here, it actually takes it in the MES. So that's pretty neat. And that's one way to do it without having to switch back and forth. Or if you want to watch the ES and not watch the MES or whatever. So, and again, if you go over to NinjaTrader, maybe there's a way to do that. And when I get some time, I might look into it because I think that's a pretty neat option. But I thought I would show that. And this same trader sent me something else I want to share with you too. He has sent me his stats before. These are weekly again. I don't know if you can see the date on here or not. But again, he's got 11 winners, 0 losers, 100%. Just to show you that other people are having success at this too. But this is the same guy that just sent me the C. This is the gentleman that's trading the MES while looking at the ES chart that I just showed you. So he's using, this is obviously from Sierra Charts because that's what his charting is. So pretty neat. But he's having a lot of success. You've seen me pop this up here before, and I wasn't sure what his charting was before. And somebody asked me how he got this chart, but this is on Sierra Charts. I don't know anything about him. But he's having some great success, and he's actually looking at the ES and trading the MES from the ES chart. So I think that's pretty neat. But if anybody knows how to do that in the NinjaTrader or multi-charts, either one, if you want to put a comment in the video down here with a link, that'd be great. I'll approve the link. I'll probably have to come in and approve it. If you try to put links in, most of the time I have to approve those comments. So keep that in mind. But if you want to put it in there with a link, I'll approve it. So, all right, here's 2 trades a trader sent me and asked me what I thought about his trades. Notice his first trade is a second entry. Notice you got a new high, first entry, then you pull back in second entry. However, you're not back to the key entry point. Look how far you are away from the EMA. You don't ever want to enter long that far away from the EMA. And you never really want to enter short. See, here's a short setup that looks similar to that. Look how far away from the EMA it is here. It works here, but it's not a good setup. So he got lucky on this one, I told him. And notice the resistance across there too. You're going long right into the high of the day where you've been rejected once, twice, 3 times, 4 times, 5 times. The odds are not good that you're going to get through there. And notice it doesn't go far before it just reverses. So really all they did was trap a lot of longs. We probably wouldn't get trapped because we're smart enough to know you scalp out and go to a runner. And that way we don't get stuck like all the swing traders do that got long right here, that got suckered in, and then watch this reverse on them. And no telling how many of them watched it go all the way down into here before they finally gave up and says, I'm wrong, and they lost a ton of money. Where this again shows you the beauty of our scalp and run. We still, even if you made a mistake and went long there, you've already scalped out. You might even had a couple of 3-point runner there, and then when it starts backing up, you exit, and you've made your points and gone to the bank with it. And somebody else, while the ones trying to get the swing trades that don't know any better, are watching it go against them. But the key is most smart traders are not entering there anyway. They're going to go short up here, not long, or they're waiting for this reversal to happen and they're going short somewhere else. And then he took another trade right here. He actually missed a good one here because that's a double bottom. So first entry, did it turn down right there? I can't tell if it broke lower or not. Maybe it's not a second entry. Well, even if you count from here, first entry, and then it runs up, and so second entry, well, that would have been a third entry. I think it breaks lower right there, but if that's a double bottom and it breaks lower, first entry, and then it runs up, well, it's still not a good short because that's a inside bar. You might have looked at this. There's another way you could look at the resistance across there, support, and it's a little failed breakout. But again, your signal bar is this bar, and it's not very good, so there's no trade there. But he took a short here. Notice you got a new low, and you get a first entry, and he just, I don't know what he was thinking here. It's not a second entry either because it just keeps making lower lows. It did go high. Actually, it did go. If it went higher first and then turned down, you could look at it like a second entry. You're not back to the key entry point. But if he went, it looks like he went short below this bar. So it's not a good setup there. Look how that big move down, even though it worked, it's still not a good entry. So he had two entries that he probably worked for him, but neither one of them are really good entries. So I just wanted to show that because I sent this to him and he knows what, I explained all this to him. But I'm not sure how this bar, this is just an outside bar. And look how you're going sideways. You got a doji, and then an outside bar, and then another bar stacked up. It's just, there's a lot of congestion right there where your highs here and your lows here. And notice it didn't go far before it bounced. You got a couple opportunities to enter over here. New low, first entry. That's your signal bar. So two bullish, but you get a double top, which is a lower high here, and I'm pretty sure that broke higher and then turned and went out the other side. So you got another chance to enter right there and look at it go. So, okay, this is one I wanted to show. Notice he's got a swing high and you get a break here, so a first entry, then you move all the way down here and you get a second entry long right there when it broke above that bar. So yes, that is a second entry long. He didn't have this white. Yeah, I guess he did put that on there. He's just showing the swings there really. So, but the way I would look at this is notice how that's all moving in unison. That's really one leg down. So you're probably going to get another move down. So I would count this double top as a new high, and that is a first entry. So that's the proper way to count that. You know, I always tell you can count these either way. So yeah, that if you go new high, first entry, and then second entry, but this is a double top basically. And because that's all one move down, it's just really one leg, you're probably going to get another leg down. So the whole idea is to look for your two legs of correction. So I would count this is a way you use the context. Count that as a new high and that all is one leg because it looks like one leg. Just look at it. And that's basically almost his trend line working right down through there. So I treat that like a first entry. So they're really killing two birds with one stone there. This is a good example of when to count a double top as a first entry or as a second entry. In this case, now if this just ran down a little bit and then turned back up and you still had plenty of room, you might use it. Like if you had a trend line right here and it bounced off a trend line and gave you a nice second entry with enough room to get out, yeah, you might take it then. But look at that. Look how we went. Look how the price is shot straight through his EMA. No bounce at all, and then it acted as resistance on the other side. That's not a good sign for going long. Doesn't mean that we can't turn back up, but something changed because we couldn't even, look how long we've been away from the EMA, couldn't even get back to it, and then suddenly we don't even pull back to it, we shoot right through it with no resistance at all, or no support at all, only resistance. And you got some more resistance right there. And notice right here coming back, you don't really have enough room into it. I would at least want that if I was going to count that as a second entry. I'd want room to get out because notice how it found resistance. It still pushes on through, being that that's the first time we've pulled back and through in a while. There's still a good chance we might test the high side, but I'm going to find me a better entry than that. I'm going to count this as a double top and that as a first entry. Okay, here's another chart a trader sent me. And this is the same chart we saw earlier. That's where the second entry was, and I showed you how to really draw this by starting here and coming up through there, and you would have had a break here. Notice how he bounced, he didn't touch his line. That tells you something's not quite right there. So and notice he had that second entry, he didn't take it, but it was there. But this is what I wanted to show you. I wanted to show you a couple of his trades. He's got a couple of really good trades. Actually, he's seeing this pretty good. He sees this trend up. It's not drawn real good, but he sees it. He's got this trend coming down. He's got this one going up. he sees that one pretty well. He's got this one coming down. He sees it pretty well. This one he's got going pretty well. I think it's a little steeper than that, but he's not far off. Um, he sees the resistance up there. He sees the support down here. He's reading this pretty well, and he has 7 trades. 5 of them wins and 2 losses. But the problem was this loser right here cost him everything. So that's where he had an issue. But I wanted to talk about this trade. This trade, he's still got his point out of this, but notice he's not back to the EMA. Don't ever enter short that far away from the EMA on a big move down, because you hadn't had any correction. You're overdue, and notice it doesn't go very far and then it corrects. So now you got your correction. And this is what I was talking about earlier. You'd probably get another leg down like this one, and sure enough, you got a little more than that, and then another correction and another leg down. But so he got lucky on that short. That's not a very good short. Then look, he's got 2 legs down to the previous support. He's a long way away from the EMA. Only problem there is his signal bar is not very good. He's got the right idea. The trade still works out, but that's a dangerous. You're guessing that that's the low, especially when your lows were down. I usually use the closes, which he has the lines really across there. So that's probably a good spot to look for the bounce, but make sure you got a good signal bar. And if he'd waited on the higher low, it's right into the EMA. But then you get the reversal here. And you still got a little room back up to these highs. You got a little bit of resistance right there, but I may not be afraid to take that one if it breaks higher. And he gets that one, then he comes back first entry, then second entry. And that's, again, he's probably already outside his trend line and heading lower, but he takes a second entry long at what he thinks is the trend line, and he's got enough room to scalp out, and he gets his trade, and then it turns down. And of course, you always draw that next swing to see if that's going to be the trend line. And this is a great example of waiting on the next. There's a little trend line working down through there. You get your close outside, moves to a new low, turns up, and you got a nice bullish bar. There's a little bit of congestion right there, but if you understand what's going on, it's not surprising that we're going back up at least to test this. So not a bad trade. And this is where he messed up. Notice it's coming down, and he took a first entry. Really, right into that resistance. Really, you're looking for a short here, most likely coming back here. Of course, when you get back to this trend line, I'd be okay with a long, but notice how it's right back into that resistance. So this was a failed breakout. We may get back into this. You need to see it bounce on this side like you did right here. And this is a great use of a higher low. If he'd have just drawn his trend line, waited on that break and a new low, and then a higher low with that nice bullish bar, he would have had an easy trade right there. He probably still wouldn't have got a runner. But when it came back here, if he had another nice bar, which those have matching lows, so you might still could have got a long out of that. But he's reading this okay. A couple of these wins were lucky. They still weren't good. A couple of his losses, I think he understands what he did. But I put my lines on here, and you can see here, my line was almost exactly like his. He just needed to scoot it up where he got it a little closer. You really should have started down in here and went right across there. This one's still really not steep as I would have probably drawn it. But this fits, and it fits on his high side as well. Of course, he already had that right, but he missed this little range in here, and that would have given him a short opportunity here on that failed breakout. And he probably sure would have known. Actually, you probably wouldn't have had this little trading range yet here, but you still should have known not to go short that far away from the EMA. Same thing here. He went long a little too far away from the EMA. That's not much of a correction. It's still a second entry and a bullish bar, and you see it didn't go far before it turned down. But notice I drew the trend. Notice how prices fit neatly in mine. And so you were looking at the break here. And what else I think that was about all I drew on there for him. So, but you can see just a little more work in his trend lines. There's a few things he's missing there, but he wasn't reading it too bad. All right, this guy sent me his chart, and he saw this right to begin with, but somewhere he got off up here, and you're just going sideways right there. You can see that. It's just, look how flat the EMA is. There's no trend there at all. But notice you got a new low. He got that right, and you're moving up. When it broke below that bar right there, one tick, that's a first entry. And notice you didn't make a new low, so you're correcting up. So there's where his second entry was, right there, when it broke one tick below that bar. But for some reason, he called that a new low, which it's not. It's still higher than that low. So there's your second entry, one tick below that bar. That bar is bullish, so there's no reason to take a second entry short there. And it keeps working up, and when it broke lower right there, you got a third entry short. Once you get to a third entry and beyond, guess what? You got a trend going in the other direction. So be careful. That's when you would probably want to wait on a lower high or something. Breaks lower. Then it works up again, and when it breaks lower right there, that's a fourth entry short. And he's calling it a second, and he really used the inside bar. That's a doji. That one's mostly bullish, and it's an inside bar to this one. Of course, that's where the next break happened, so I'm assuming that's why he thought that's where he was supposed to enter, but he had this all screwed up. So he wouldn't start his new, you wouldn't get a new count till you made a new low, and look, he start working lower. So as soon as you make a new low now, because you're way down past any of these lows, you're going to get a new count. And then finally right here, you make a new low. That's the first time it breaks higher. So there's your first. So no, there, now for the downside, your entry is 0. And you start working up, and you never get another, you never even get a first entry yet. Nothing's broke lower anywhere across there. So I hope that's clear. Notice that this low is higher than this one, so no new count. This low is higher than that one, no new count. This low is higher than that one, so no new count. And you don't make a new low till way down here. Now you got a new count, 0 again, just like you were here. So I hope that's a little clear on how you do the counts. Okay, I wanted to show one more here. We're about to run out of time, but he took a long right here. And I'm not sure what he was thinking. I think he saw the 2 legs down, and he sees the possible trend line. But notice your signal bar is not very good. That's your first clue. And this is really just a trap. And the main reason I wanted to show this, because he realized he actually saw a trade just like this a while back, and I guess it took off and ran, and he missed it. And so he sees this happen again. And even though it's not a good setup, he takes it because he remembers what he missed, and he reinforced in his mind that, hey, I'm going to miss a trade, and he gets impatient, and he takes his trade, and he realizes instantly, because it goes one tick and turns and goes out the other way. And it doesn't take but a minute to realize, hey, I'm trapped. I did the wrong thing here. So that's really the main learning point I wanted to get here. By being impatient and reinforcing bad trades, that's the reason I tell you, if you took a bad trade and it worked, you're just reinforcing bad habits. So always study your trades at the end of the day. And just because it won doesn't mean it was a good trade. You can figure it out at the end of the day, hopefully, if it was or not. And if you're not sure, ask me. But he missed all this resistance across here. He doesn't have it on his chart. This is a trading range across here. This is where he went short right there. It looks a little different on my chart, but you can still see the breakout, a couple of tests of the resistance right there, back on the other side, then we start lower, and he went long. He had a little break higher on a bar and went long right there and got burned. So here's his chart again, and you have the resistance here, failed breakout, and then you test it a few times again on this side. Turns down, breaks higher, makes a failed second entry long. If you recognize that you're trapped, just reverse right there. And man, that was a quick, easy move. And you just came off the high, what looks like setting up for a range. And the second part is he has the trend line right here. And you got a break of it. So you're expecting prices to retest the low anyway. So there's a lot of different reasons you shouldn't be thinking long here. You're thinking short. And so he just completely misread that. But the good thing is he realized he was trapped pretty early. I mean, probably I'm guessing by the time this bar completed, he realized he was trapped. And if you can gather your wits about you in reverse, you can make it all back right there and not ever miss it if you realize it's a trap. So here's one more that really is just the opposite. Notice we moved up and went into a little trading range here. It doesn't look, I mean, if you went to my chart, you can see a clear range there. I don't know what kind of chart this is. But you can still, he has it. I mean, he drew this on here, not me. So he sees the range. What happens on a failed breakout, especially that you traded up into? It's probably going to fail. So you're not looking for a short down here. You're expecting prices to come back in here. Even if they're going to go down, they'll probably test it. You want it to test it a couple of times and give you a good signal bar. You only got one test there, and it fails instantly and goes higher. So don't get sucked into entering in. Most of these breakouts are going to fail, even if only temporarily. Here's another one up here. It fails out the bottom. What does it do? It shoots back up before it goes lower. Here's one we didn't get. You didn't really come back. But you won't see many that don't come back. Here's one right here. Same thing. It fails out the bottom. It comes back before it goes lower. 9 times out of 10, it's going to come back at least temporarily. And you probably want to see a couple of, you want to see it fail out the other side maybe and get short or something. So just be careful on those breakouts. Definitely don't be going short way down. And notice there's really a little double bottom across there. There's a little support across there. So just not a good place to go short. All right, we're already at 42 minutes, so you can see the trades here. I may not even go through each one of them. Obviously, after this first leg down right here, you can see a little correction right there. Look for a measured move. And you can see we got that little correction, but then we kept going lower. And we really traded down here. Your first target should have been coming down here was probably your close from yesterday, which is that red line. You can see we closed there yesterday. And then the second target would be the lows, and that's exactly where we went to. And notice we made a perfect measured move, corrected for a little while, and then fell on down. It just wasn't done yet, but it's still, you can see people taking profits at the measured move. And then we went into this trading range, and so your shorts are off the high here. Notice you got nothing really but shorts up here. And then you would take your longs off of the lows down here. I got one in the middle here, but it's off a it's really out of a little breakout out of another range, and we're trending back up to the upside. So as long as you had room in there. Then we had the failed breakout, a couple of chances to go short. Then we went into 2 o'clock. I'm going to back out just a little more. I'm probably not going to go through all of these trades and describe them. I'm just going to probably tell you what it is and move on. Notice you got a little double bottom here. First entry short, second entry short. So you got a failed second entry. The problem is you're right into the high, but it is off that trend line, and it does come back and test the breakout on a failed second entry short. And that's a very bullish bar. You might let it break higher and drop a limit order, see if you can get a little better entry before you get to that high. And but you would have already been out of that one regardless. If you waited on it to come back, you wouldn't have taken as much heat. But I marked that one green. It's not a perfect setup because you're going long right into that high, and that is the high of the day, the overnight high at that point. So then but notice you got the trend working up, you get the break, you get a couple of moves up, and then we're going the other way. And just draw that trend line. Originally I had it a little steeper, but you'd correct it right here. Notice we came back to it, but there's a second entry short there. Notice you had the little failed breakout. You're going in your little range. First entry, second entry. And you got matching highs here on the high. So That's not a perfect signal bar, but that's good enough on the second entry off a key entry point. Unfortunately, on my chart, you don't really get a chance to enter into this. If you had a different chart, you might have had a little better setup. And then we went sideways again, and you fell out the top. Normally, I would say you might want a little more room right here. This one, you could argue for it to be green. Let me make this a little bigger. But we just shot out the bottom, so there's a good chance we could shoot out of it again. And this has been a big, strong downtrend, and you're probably looking for a measured move once we start going lower. We're not back to the trend line, but I'm just playing this little range here is basically what I'm doing. And there's enough room to get out by here. It's questionable here, so this is real close to maybe being green. Just like this one, you didn't have much room here. I made that one green. We're not even back to the EMA here or the trend line. So, and I didn't mark this one. This is the same thing again. Notice you pushed out first entry and it broke higher and turned down. So there's a second entry, but again, you're going short right into that, and you had a little overshoot maybe, and you did overshoot this side, so you got a break outside this trend line. If you move that, you can see, but it is right off the key entry point. So that's another one. It probably trapped some people, so it should probably at least be green, and you might even argue for it to be red. Here's another second entry. Pushed on through first entry, second entry. You got a little double test of that level. Now here you got enough room. Made that one red. Here your signal bar's right here on the second entry short on that one. And that's technically went lower there, but that's still 2 legs back. And regardless, you can trade the range and trade it down. We did have a measured move in there, so you had to think about that. But I still, as strong as that is, I'm probably going to take that out of the range of rules. Then we bounce, got a new low, first entry right there at the key entry point. We're overshooting it here. We've had a possible break up here with 2 legs down. And if you measure these legs, they're pretty much measured moves. There's leg 2. We actually went a little further, but we were testing that overnight low. So you're moving up first entry, and you got a second entry right there. That one is really tempting because it's a second entry. But notice what would have happened to you. So again, and you end up just going sideways. So wait, this is another time you'd probably, because of this trend line working up here, you better wait to see what happens right here. And you end up going sideways, you get a failed breakout. You still can't go short because of that trend line, but it drops on down. And it drops, so you end up having a failed breakout of this little thing, failed breakout the low, and it's really tempting to go long right there. And you could probably, if you had a really good signal bar with plenty of room back to that EMA, I'd probably say take that one. But wait on the higher low here. And so you're going long above the EMA back into there. And this thing just keeps on going. And you get a true reversal here. Notice your low, first entry, second entry. So I guarantee you they trapped shorts right there. It broke lower turn. Just go long right there. And you're looking for another leg up. There's leg 1. There's leg 2. Basically to the tick. And then again, it's tempting to go short there, but wait on it. This is actually, let me move this. This is actually your signal bar, and you make a matching high here. So it's tempting, and it would have worked, but wait on a lower high. And then notice what happens. You get a first entry, a second entry, it fails. You've tested this a couple of times from the low. You get a relatively bearish bar. Just go short right there, and you get a great entry. Then you get another second entry short right here and a double test of that, and it comes back to the trend line. Of course, you probably would have, you still could have had that trend line, but depends on how good you are, how skilled you are at this point. You may not have found that, but it's 2 legs back to the EMA, second entry short. Only problem is it is in the middle of a range, but at this point you still have a very strong downward bias. We haven't really proven the range. We kind of were proving this is resistance, but you haven't proven anything down here. So you'd probably still take that trade. And you see what happens. It breaks out, fails out the bottom, runs back up, fails out the top. But I like that one. You can see there's two legs up there. There's kind of what you call a hidden second entry. I hate to talk about those because I'll get a bunch of questions. If you don't know what that is, don't worry about it. It's kind of advanced and it'll just confuse you. But you can see that trend line working up, and you really get a close outside and a new high all in one bar. The key is having enough room to get out before you get back to that EMA, and it ends up not mattering, but you want to make sure you do. And we run all the way back down to the low. That was a great entry. And we just came off the high, so there's a good chance we're still going lower. And if you measure that leg, move it over here, you basically get another measured move down. Then we reverse. You're just going in another range. You're above the EMA. You just came off the low. You're heading up here. Just trade it as another failed breakout. See, there's one you didn't have enough room, and look, it went a few ticks, touches it, bounces, and goes up. And really, you could have considered going long right there. That's a higher low in an uptrend, and we're closing way outside. Only problem is you still had this resistance kind of across here, so you don't know that that's still not in play. It really gaps. Notice there's a gap right there of almost 2 ticks, and that tells you that there's definitely some resistance across there. For some reason, prices tend to gap across those support and resistance levels. So you probably couldn't have got in that trade anyway. We come up here. There's a lower high right here, but it's in this stuff, so you can't really go short there. And I marked this last possible long because you just got a trading range going on here. And notice there's 2 legs back and a double test here. Nice bullish bar. As long as you got room to get out before here, you might take that one, but we just came off the high, so there's a good chance you could get trapped there and go lower. But this fits our rules if you wanted to take it. And you can see the two measured legs. And then we're just kind of working higher. You got in another one of these, failed out the bottom, failed out the top. You want to make sure there's enough room to get out right there. There just barely is. It ends up not mattering. But you're going to treat this like a failed breakout, so you're looking for a reason to get short up here to try to come back here. You just need to know that this moves over, and that's probably going to fail. So you got a lower high here, but it's right back into this. It still would have worked if you had enough room. Notice how we're going sideways. I don't really like that. That's not enough correction. We talked about one similar to that earlier. Notice then you get another leg up and another correction. Now you got a triple top across there in a big bearish bar. Now it takes off. And you just look for another measured leg right there. There's leg 1. And what do you know? There's leg 2 before it corrects. So, all right, 53 minutes. Every day I say I'm going to get these below 30, and I never get there. So I'm going to wrap it up. I'm not going to hang around any longer. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.